Hello again, everybody. Today is Tuesday, April 22nd. Good to be with you again. Dr. Richard Smith here on Cycles TV with the Foundation for the Study of Cycles. And once again, just want to mention our Live in 25 conference. I'm not sure I've emphasized this lately, but this is an in-person conference. It is not a virtual conference. We're not going to be making recordings available of the conference. So if you want to be in the only place where cycles are going to be explored in depth with some of the greatest minds in cycles alive on the planet today, it's going to be in New York City, June 12th to 14th. And it's going to be incredible. So really hope to see you there. If you haven't signed up yet, please join us. And it's going to be fantastic. So with that, hope everybody is doing all right out there. Been another wild week in the markets, and we're going to get into it. Do let me know what's on your mind, what your questions are. We'll talk a little bit about kind of what we should cover going forward after we get through today's content. But without further ado, let's take a look. All right, so as usual, we're going to start by looking back on the cycle forecasts that we looked at this time last week. So here we were with copper. Let me just make these large charts. It'll help. And you can also toggle on and off the out of sample data, which is kind of nice. So you can see what was happening here. So here was our forecast on copper last week based on the 2-hour data. So this is 2-hour data on copper. And if you'll remember, we looked at a bunch of different assets, and towards the end of the session, we put together a portfolio of uncorrelated bets of some of the best cycles indicators that we had. So here we were, the forecast on copper. And if we look at how copper performed, I'd say on the whole, lived up to the billing and was up over the course of the past week as the cycle forecasted. And, the momentum was very good. And we also just were remembering and noting how copper is a very, at least lately, has been performing very well according to the cycles. It has very clear cycles, right? So the 59 period cycle, the 197 and the 307, they all stand out on the spectrum very nicely, right? And you can see they're number 1, 2, and 3 here in the rankings. So copper has continued to cooperate well with its cycles. We looked at the E-mini S&P 500 and the 2-hour data there. Also the cycles, pretty good, pretty clear on the spectrum here. Okay, we had the 118, 176, 250. And if we look at where we were about here last time with momentum up, but kind of rolling over. And indeed, the S&P has declined since this time last week. So 2 pretty good calls from the cycles so far. Here was Bitcoin. And here's where we were last week, right? We had the cycle turning down for a short period of time with momentum coming down, and we did get a little dip. And then we are currently off to the races in Bitcoin. We'll see how long the race goes on, but at least we'll update these cycles again at the end of today's session. But, you know, I'd say that was a decent call by the cycles on the 2-hour data on Bitcoin. I was expecting more of a dip here. Thought it would extend a little deeper, but did not. And the cycle has done well since then. All right, the euro was another one we looked at, and it's been absolutely incorrect. So was pretty clearly forecasting down, and it's been almost nothing but up along with the euro and of course gold and the dollar being down. So the euro and gold and the dollar were all fails. But we looked at ZT, which was 2-year treasuries, forecasted a little up move. That one worked out pretty well. And Ethereum, we were forecasting some down, and didn't get down too much, but didn't really go up either. So on the whole, not a bad set of calls by the cycles. Gold, of course, went parabolic practically, completely ignored its cycles. And today's talk title, I called it Gold Breaks the Banks. And we're going to get into that a little more as we continue. So always like to look back on what we did, what we looked at last time, and show when the cycles are working, when they're not working, where they're working, where they're not working. So that's what it was. And then lastly, before we get into some new stuff, we put together a little portfolio of some uncorrelated bets last time. We said short the E-mini S&P, long 2-year treasuries, short gold, long copper, and short the euro. Okay. So from last week, 1 week ago, April 15th here, when we were last together, this is how that portfolio performed, and it was down a little bit, about 0.75% over the past week, whereas the E-mini S&P went on a much wilder ride, was down over 5% at one point, bouncing at the moment, but still down 3.5% since we were last together last week. So would I have liked this to gone up? Yeah. But look how smooth this is, right? This is what risk parity does for you, making uncorrelated bets with similar risk, and gives you a much smoother ride, and helps you avoid the big moves where you might find yourself getting reactive instead of responsive. So on the whole, the cycles plus the making of uncorrelated bets, I can live with that. It's a week I could live with. All right. So now then, let's talk a little bit about gold. So gold has been on a tear. Everybody knows it. I'm going to start just by looking at some assets priced in gold. And I started with the banks. Okay. And this is just hourly data. I think it goes back to, what was this? February 7th of 2025. This is JP Morgan, priced in GLD, right? So and it's a percentage change chart. And I just want you all to see that, since early February, gold has outperformed JP Morgan by 28% currently. Okay. So gold's in the denominator here. So when this is going down, it means gold's going up or JP Morgan's going down or both. Bank of America, similar story to JP Morgan. If we go back here to end of January, 1st of February-ish, right? 35% decline relative to the price of gold. And the bank index in general, going back to, again, end of January, 1st of February, a 35% decline relative to the price of gold. Here's the S&P 500 going back to end of January. %30 decline relative to the price of gold. Financials, XLF. Back to the end of January, 27% decline relative to the price of gold. NVIDIA. Back to end of January, 45% decline relative to the price of gold. Bitcoin. This one I went back a little further. This is end of December, 34% decline relative to the price of gold. And then lastly, in this one, absolutely, well, let me start here actually. So this is short-term treasuries, 1 to 3 year treasuries, the Vanguard fund divided by the price of gold. Daily data going back to 2016, 68% decline relative to the price of gold. Whoa. And lastly, this one is at total mind blower. You know, somebody tell me if I'm just missing something here, but this is 2-year treasury futures, ZT, continuous contracts divided by the gold treasury futures, looking at weekly data going back to 2001, April 2nd, 2001. And this is a 92% decline of the price of a 2-year treasury divided by the price of gold. So that is, you know, beyond the kind of short-term conversation we've been having here, but it was very striking to me, and just wanted to share that with you. But in general, certainly over the past couple of months, we've seen gold soaring and everything else, or many other things, declining. And you know, I said gold breaks the banks, and yes, I'm thinking about how gold is kind of a playing a little bit of a safe haven play right now, which, you know, for those who have been in the markets as long as I have, 20 plus years, we've been hearing about gold and thinking about gold as a safe haven play. And I guess it has been relative to 2-year treasuries, certainly. But it seems like it's really here now, right? So let's just take a look at a little bit of the cycles around gold and see what's going on there as well. So I'm going to start with the 2-hour cycles on gold. 2-hour data. Okay. And the first thing I want to point out is that this spectrum is not super clear. If we look at the spectrum, you just have a lot of peaks kind of, you know, without a lot of definition on their sides, kind of clustered together down here, just not super clear. If we look at the Bartels, all of them, I mean, they're not that high. So the cycles are not really working great on the short-term data on gold right now. I'd say we have a muddy picture from the cycles. But if we look at, just put our cursor over the latest data point here, and we look at all those colors on the right side of the chart. Okay, let me pop out of here. Like all these cycles are red, pretty much, except for the 105 and the 295. But a lot of red, a lot of overextended in the gold cycles on a short-term basis. But gold just doesn't care right now. When I said gold breaks the banks, I was also thinking of the banks of the cycles, right? Kind of overflowing its banks like a river overflowing its banks. If we look at the daily cycles on data on gold, okay, there's again, the spectrum is not great. I mean, look at the spectrum over here in copper, clear peaks, well-defined edges versus the spectrum here in gold, right? Choppy, muddy, Bartel's not too good. So gold is kind of overrunning everything right now, which is the point of today's presentation, to just take note of this, that there's something going on with gold. So here are the daily cycles in gold. And again, decent cycle here, this 110 days. The Bartels on this, right? So we got a not great 68, right? But at least it's got some definition there. But again, not great, because gold has been breaking the banks. Gold has been breaking the banks of its cycles. It's been truly living up to its billing as a safe haven asset this time around. And if we look at the daily data on the cycles, clearly should have been topping on the strongest cycle, but it's not. Momentum is going straight up. Hasn't quite passed the peak here, but got a new high in momentum from here, still going up. Lastly, if we look at the weekly data on gold, now here there is a clear cycle. Okay, there's a clear winner in the cycle spectrum here at 242 weeks, so that's a little less than 5 years. So peak to peak, let's see, that was March of 21, and this was January of 25, so 4 years, excuse me. A little more than March 21 to January 25, a little less than 4 years. And gold is clearly past the cycle peak, but momentum is still straight up and is actually, reaching almost new highs, certainly higher than here, higher than this top, right? So we're from this top to this top to this top to this top. Momentum is not giving us a negative divergence. So that's what the cycles are saying about gold. First of all, not really giving clear signals. They're muddy on the shorter term data. They're not even that great on the daily data. On the weekly data, the cycle is pretty clear and overdue for a correction. but not there yet. Momentum is still going. So lastly, if we look at the commercial traders in the futures markets in gold, it's interesting. This is the commitment of traders. And we see that, you'd expect with gold soaring to all-time highs that they'd be selling more gold into that market, but they've actually been pulling back their shorts, covering their shorts. Okay, so if we go back here, this is 5-6 years of history of the commercial traders in the gold markets. They've never been long. Okay, the zero line is way up here. So they've been short. At the end of 24, they were as short as they've been in the past 6 years. But it's just interesting to me that they've actually not been adding to their shorts, not been selling more gold in the futures markets, but actually covering some of their shorts. So that's interesting to me. And then the small trader sentiment here. Thank you, Jake Bernstein. And this is a few days old. It's a little bit higher than here. It's up here around 85 or so now, but it's up to high levels, but it's not at the highest we've seen it in the past couple of years. So something's going on with gold. And the cycles are suggesting that it should have ended by now, but it hasn't. So with that, let me take a break from the charts and see what's on your mind and what you're thinking about gold and what you're thinking about in general. So, wow, international crowd today. Thank you, everybody. Germany, Istanbul. Fantastic. Smiles are good. What software is your preference for importing intraday 2-hour data to work smoothly with the cycle analyzer? So if you're a subscriber at the pro level, okay, to the cycle analyzer, then you have access to the 2-hour data. You have access down to 1-hour intraday data automatically. And you can also, the easiest way to get other intraday data into the cycle analyzer, you also have to be a pro subscriber to use the intraday streams, but you can use TradingView, and we have plenty of documentation on that, how to set up live streams from TradingView on any asset, any time frame that you want. So it does take a little bit, a minute or two, to configure a live stream on an asset for a particular time frame, but once you've got it, then it should be there for many years to come. BTC, okay. Did the cycles predict this run up in gold? So Kate, the cycles, if we saw that weekly cycle, that was the clearest one. Did predict a run up in gold, I would say up until kind of the end of 24, but we're past that peak and we're not slowing down whatsoever. So a big part of my point today in sharing this is just to say something's going on with gold that I haven't really seen in my lifetime in the markets, 20, 25 years at this point. I guess a little more than 25 years. And gold is behaving in an unusual way. And it does give credence to me, to the idea that there are big changes going on in the global economy. I'm not sure this is what Trump had in mind when he talked about the golden age of America, right? Is it the primacy of gold over the US dollar? Time will tell. but gold is on quite a run, and it's really defying the cycles, and it's defying everything. Meanwhile, the cycles do suggest caution now. That weekly cycle is pretty darn clear, and but momentum is really continuing to soar, and we're seeing the commercials, kind of backing off of their shorts, covering some of their shorts. So this is not a train that you really want to step in front of to go short right now. In my opinion, it's not giving good, clear signals other than just keep going up. Corn and soybeans, okay, sure, we could take a look at that. Brazilian ETF EWZ, okay, sure. All right, so we'll take a look at those requests, and then we'll go back and look at the current cycles in the 2-hour data in the futures markets, just to kind of been keeping track of those assets, see what things are saying, and wrap it up. So back to the charts. All right, so let's see here. Let's just start out with EWZ from Yahoo Finance. So this is the Brazil ETF. While that's loading, let me get CC and CS. Okay. All right, so here is EWZ. Daily data on EWZ. We got some nice clear cycles on the spectrum. When you got 155 and 105. Interesting. This is going back 850 bars. So those cycles, they've got good definitions, pointy tops, big green triangles sitting on the tops indicating strong Bartels, particularly this 155. And on the whole, the cyclic RSI is, kind of neutral. The cycle's been up strongly. Honestly, I would have expected a little more oomph out of this cycle, a little more strength. Looks like it's coming into a top, and if we add in the 105 to that cycle, looks like it has already topped. So I'd say on a daily basis, this looks shaky to me from a cycles perspective. All right, corn futures. Pretty clear cycles. Just grab the best cycles. So we got the 232 here, the number one cycle. Add in the cyclic RSI. And, clearly the cycle's down. Momentum gave a beautiful sell signal right here. Came down, but has rallied the past month or so. Looks like it's got more down to go, though, and the momentum kind of rolling over a bit. Pretty much all the cycles, all the colors here are red, right? So I guess this 137 is not. So that 137 is bottoming. That's the number 2 cycle. Okay. So maybe some relief for that. I know you wanted to look at the 2-hour data on that. Let me see if I can do that. Let's see here. So that would be, I am not totally sure. Give me just a minute here. See if I can find that ticker. Oops. Okay. All right, it'll take me just a minute. So while I'm looking that up, if I can find it. Yeah, okay, maybe. All right, let's see. We can take a 2-hour. All right. Don't know if this is going to work, but I'm giving it a try. All right, got it. So here we are, 2-hour data, corn 478. That looks good. Got a nice clear cycle here, the 187 and the 117. But really that 187 is very nice. Momentum fading, clearly broken the momentum and headed down. So that looks pretty bearish. Meanwhile, if we look at the number 2 cycle, the 117, possibly bottoming. So on the whole, I'd say the 2-hour data on corn looks like a caution. And then wheat, we got the 177 here. I think that was similar to what we saw in corn, right? So 175. So this is soybeans. Cycles aren't quite as clear in soybeans, but on the whole, I'd say caution. And if we look at the 2-hour data in soybeans, now there's a clear cycle, 120 periods. Also on the bearish side with momentum clearly deteriorating. All right, so let's jump back now. Look at the cycles we've been following week to week in the 2-hour data. So we're going to start fresh here with our 850 data points. Copper, clearly nicely defined cycles. And looks like it's got some more room to run, but definitely nearing the top of its 2 strongest cycles in the 2-hour data. Maybe another week. The 2-hour data in the E-mini S&P. Are we going to finally get a tradable bounce here? Well, the number 1 cycle is the 118. There's 176 and 248. Eeks. Wish the cycles had better news for us. Mostly this 176 cycle right here you can't ignore that one. It's got decent definition. My personal view is that we're likely to have another shoe drop before it's safer to be on the long side of equities, even though the daily data on equities that we've been talking about for a while is pretty much as bullish as a setup gets. So still some caution from the 2-hour cycles in equities. Bitcoin, I like how the cycles are shaping up, getting clearer, more clearly defined. But I do think we're topping in the 2-hour data on the cycles. Meanwhile, we've got new momentum highs. This isn't necessarily a train I'd want to step in front of, but probably not the time to be getting long either. If you're paying attention to the 2-hour cycles. All right, looking at currencies, the euro. Cycles, a little muddy. I wouldn't call them great here. Yeah, similar to what we've seen in the past, euro looking toppy. So if Trump could stop trashing the dollar and the dollar gets some relief, I think we might have a little good opportunity to short the euro and see a rally in the dollar. All right, treasuries, 2-year treasuries. Some caution. Ethereum, 2-hour Ethereum. Nice clear cycle here. Nice bottom. Momentum going up. I think that's a nice support to the stronger up cycles in the daily cycles. So Bitcoin and Ethereum in the daily cycles, both pretty bullish. And I'd give the edge to Ethereum this week over Bitcoin. Lastly, gold. Let's see if gold cycles are shaping up any better. The spectrum's clearing up at all. Not really. So take these gold cycles with a grain of salt right now. That is my message of the day. So let's bring this back over here. Gold is breaking the banks. It's breaking the banks, literally. Crushing financials, crushing the banks, crushing treasuries, crushing everything, even crushing Bitcoin, and breaking the banks of its cycles on the 2-hour, on the daily, and now also on the weekly. So I don't know when this river stops overflowing. But I wanted you to know that there's something different going on with gold. And we'll see how long it goes on. The cycles certainly say it should be topping. If you were just trading cycles, you'd be licking your chops at this shorting opportunity. But meanwhile, sometimes we have to wait until things change. And so far that hasn't happened. And on that note, actually, there is one more thing I wanted to share with you today, because this is trading market cycles. So there was a fantastic interview this week with Valerie Gastaldi on Cycles TV, interviewed by Ron William. And let me just show you one more thing here. I really encourage you, if you are a trader, to watch this video. Okay, it's what cycles say about today's volatility. with Valerie Gastaldi. She is a market veteran, 35 years, helped founded options trading in France. She's from France. And she is a real trader who uses cycles, mostly longer term cycles, okay? Not necessarily the same, short-term intraday dynamic cycles that we've been talking about here. But as a trader, her insights of how to use cycles are first class, as good as it gets. One of the things I like to do when I find a presentation that I like a lot is I go here to the expand kind of the information section here, and I go to show transcript, and then I turn off those timestamps, and I just copy all of this text, and then I go paste it into Chat GPT, and I say, give me some bullet point summary here. And then I go back and ask Chat about the things that she said that I remembered that I want a summary of. So I thought this was very good. I said, summarize for me her closing comments. So she said, what truly drives markets isn't facts or forecasts. It's what people believe about the future. Investors act based on their dreams and expectations, not necessarily on reality. So understanding market positioning and the dominant narrative is critical. Most people invest based on incomplete or overly optimistic scenarios. Even professionals often ignore key parts of the macro picture. What matters more than being right is recognizing when crowd sentiment is stretched and knowing whether it's already fully priced in. That's why cycles are so valuable. They don't predict precise events, but they help you anticipate how the crowd might react to news. When sentiment is overly positive and the cycle is turning down, which is exactly what we saw at the beginning of this year, even small negative news can trigger big moves. And this was one of her points, actually, that when you can find those situations where the cycle's really topping, sentiment is excessive, and the narrative is overdone, you can be wrong and not get hurt too badly. But if you're right, you can have a big move in your favor. And that's how she uses cycles. And I thought that was excellent. She also talked a lot about stop losses, which was very good. So I just said, and what did she say about stop losses earlier in the transcript? I think it was about a third of the way through. Something about never trading without a stop loss. Valerie said that she only makes trading decisions based on prices because she's a trader at heart. And as a trader, she must know when she's wrong. She emphasized that she never takes a position without having a stop loss in place. She explained that she assumes she will be wrong from time to time, maybe even often, and that's normal. The goal isn't to always be right, but to keep losses small and manageable so you can preserve capital and stay in the game. In her view, the ability to continue trading after several losses is more important than trying to avoid losses altogether. This is why price-based stop losses are essential for her process, because they make risk measurable and allow her to trade with conviction without risking ruin. So really encourage you all to watch the whole interview. There's some great information in there, but as traders, she really knows what she's talking about. So encourage you all to watch that. She even went so far as to say that technical analysis isn't very good at forecasting. It's good at helping you know where to place your stops. So I thought that was really provocative, and it rang true to me. And really the goal is to kind of make sure you can put on your trades in a place where if you're wrong, you're not going to get hurt too bad. But if you're right, you're going to have outsized gains. So with that, continue to say, be careful out there. And look where the cycles are working well. You can see that in the spectrum. Trade the cycles that are working well. Look for opportunities where your downside is, low, and your upside is big. So with that, please do let me know what you'd like me to cover going forward. I think I've covered a lot. I'm a little concerned I'm covering too much every week. So love to hear from you. Leave some comments and let me know what is helping you out from these shows and what I can do more of to be of value and of service to you. And please join us in New York City and subscribe to our YouTube channel if you haven't already, and bring a friend next time. Thanks, everybody. Have a great week.